Hey everybody, this is Jason Foreman with your weekly real estate market update. First of all, I just wanted to wish you guys a happy 4th of July weekend coming up. Stay tuned here every week, once a week. It used to be on Mondays, but now Wednesdays is my new home. Every Wednesday, I'll be posting a local Los Angeles real estate market update as well as a nationwide real estate market update. All right, so let's get into it, you guys. Forbearances, where people have agreed with their bank to not pay their mortgage for at least 12 months, which has been extended to 18 months, has been extended yet again. So first of all, the first deadlines for mortgage forbearance, 12 months, was going to be in January 2021. That's when the first round of people were going to pay their mortgage back and agree to go back into paying their monthly payments to the bank that they owe on their home. I personally thought that this was going to get kicked down the road, kicking the can down the road. I thought this was going to get extended and continue like I thought it did. It continued through June. Okay, that's a little further getting into summer. It got extended through July. We thought at the end of July, maybe at the end of August, we're going to see most people come out of forbearance and be required to pay back their home loans. And now we recently got news that people can have the extension of all the way to the end of September. So you guys, this could be an advantage if you're going through forbearance because you have a difficulty due to the coronavirus, especially something that was unforeseen, sudden, and out of your control. I can definitely relate to that. However, there are effects from this as well, especially the longer that it drags out. It creates unnatural occurrences in the market. For example, foreclosures are a natural occurrence in the market. They keep the prices of homes down, especially on a local level. You know, every now and then, even in high-end, affluent neighborhoods, people cannot afford their home anymore, and foreclosures happen where the bank takes over the home and the bank sells it to try and recoup as much debt as they can. Another thing that's less harsh and not as negative and doesn't bring the home prices down as much are short sales, where people, they owe more than the home is actually worth. The market may be doing bad, or they, took out multiple loans on their home, so they do a short sale where they sell it for $200,000, although they owe $300,000, and the bank will kind of negotiate with you, let you sell it for what it is, and not exactly, but more or less walk away. None of that is happening, because why would you do a foreclosure where the bank takes over, and why would you do a short sale where you sell it for less than you owe when you could just continue living in the home without making a payment? And what's happening then is nobody's selling their home. Practically nobody's selling their home, and that's why we're seeing such a low inventory, one of a few reasons, and that's why home prices are incredibly high. This is a difficult time for buyers. I'm not saying it's impossible, but it's making it really hard. Very competitive market right now. Multiple offers going up $50,000, $100,000 over asking price. We used to only see that in local markets that were very popular. Now we're seeing it across the United States. And the national days on market that homes are sitting on the market, it's only 14, which is really good for sellers. That's a very strong market, showing that homes have a high demand. As a real estate agent, if we sell something in 30 days or less, that's really good. If that national average is less than half of that, that's a really strong market for those sellers. So a big piece of what's driving the market up are those forbearances, and we thought people were going to come out of it, and it's like, when are they going to finally, have those people go back into paying their mortgages? It looks like indefinitely they're not going to pay their mortgage. I'm not sure how much further it will get extended. Real quick, you guys, if you would please hit the like button, that would post this video out to more and more people who can benefit from this information. And if you hit the subscribe button, I would appreciate that very much, and that way you get these updates, because everything is changing moment by moment, week by week. What else do we have? Okay, so 40-year mortgages. So banks are proposing banks that have government-backed loans are proposing to possibly give an extension, a 40-year mortgage to people who are going through a hardship due to coronavirus that come out of forbearance. So 40-year mortgages are not for people to go shopping and to purchase a home for a length of 40 years. However, people are being offered it if they already own the home and they're having difficulty making the payments. And it's when they go into forbearance for 12 or 18 months or whatever the new extension is, when they come out of it, people may have an option, if it's still a difficulty to make those regular payments, to extend the life of the loan to 40 years. Now, there's some benefits and there's some difficulties from this. You still need to continue paying the mortgage, and it takes longer to pay off. although you're paying it longer, that same amount of money, that one large lump sum, whether it's $1, $2, $300, $500,000, instead of split over 12 months, 30 years, is 12 months, 40 years. So those payments get smaller, making the home more affordable for the homeowner. I'm not sure how to feel about this because it's good to help people who are in a difficult financial situation. I'm mostly on board with helping people who are in a sudden, unexpected, and unforeseen financial situation and a temporary solution to help them in that emergency situation. However, helping people long term, people should have been able to plan long term. Like if you have a difficult living situation and it goes 6 months or a year where it's difficult to pay rent or pay your mortgage, then it's time to make some sort of an adjustment and adjust on it on your own. However, if you could play that card and that helps you, then go ahead and play that as well. It's going to be really interesting to see the different opinions weighing people who are for or against 40-year mortgages. I'm not going to give my 100% my exact opinion, but there's definitely pros and cons of it. There's definitely a lot of advantages if you have that option and you know how to play it. You guys have any questions about 40-year mortgages and options with forbearances, go ahead and send me a direct message on Instagram at JF Real Estate Agent. And you guys can also text me if you have any questions direct at 310-256-3209. Couple more points before I move on. So moving on, interest rates are looking to increase over the next couple of years. And that could finally, yes, be some good news for buyers. When interest rates go up, people get less for their money. Those monthly payments when they take out a loan for a home, for example, a $300,000 home with a higher interest rate has higher monthly payments versus a $300,000 home with lower interest rates, like a low 3% interest rate versus a high 5 or 6% interest rate. So with that being said, if interest rates are going to increase over the next 2 years, most likely, right now could be a good time to refinance. I'm definitely not an accountant and I'm also not a mortgage broker. However, I can introduce you to a great mortgage broker if you guys want to refinance. Refinancing is not for everybody. Make sure you consult your proper financial experts before you go ahead and make that decision. And so just the number that interest rates are at 3%. That's pretty good. The lowest of the low during this whole situation that we've been recently having is about 2.7%. Those are great interest rates. That was an excellent time to refinance. I helped a few people do that. But if you guys still want to refinance to either pull money out or just lower your monthly payments, not a bad time if that works for you at 3%. Those rates are pretty low. All right, guys, like I said, don't forget to like and subscribe. Have a great 4th of July weekend, and we'll see you next week at Wednesday.